One of the most frequently asked questions we get is, when should I purchase my next life insurance policy? And another frequently asked question, which goes hand in glove with the first question, is, why do I need to own multiple policies instead of just one big policy? Good questions. Here are the answers and the reasoning behind the answers to these questions. When people purchase their first participating whole life insurance policy, few, if any, are independently wealthy. This means they're usually not in a financial position to purchase all the coverage they currently need, let alone what they will need for their future financial sustainability. According to the 2018 CNBC Income by Age report, every 10 years you live, or each decade you live, you earn more money annually than you did in the previous decade. This means that during your fourth and sixth decade of life, you will most likely be earning more money than you have ever earned up to this point in your life. So, trying to purchase all the participating whole life insurance you will need for your entire lifetime during, say, your second or third decade of life just doesn't make sense. It's not even feasible because, number one, you most likely don't have enough money earned or saved to purchase that amount of life insurance at one time. And number two, you typically have more expenses during your second and third decade of life than you will during your fourth and sixth decade of life. But even though you can't purchase all the participating whole life insurance you need and want at that time, the second and third decade of your life is the best time to purchase convertible term insurance. This is because most Americans are in better health during their second and third decade of life than they will be for the rest of their lifetime, and insurance rates are less expensive at a younger age. With good health and a young age, the cost of term insurance is an excellent bargain. And the good news is that owning convertible term insurance guarantees you the option to purchase participating whole life insurance in later years, with the same good health rating you received on your convertible term insurance at your younger age. It could be that you need to purchase two policies in the very beginning, a participating whole life insurance policy and a convertible term policy. Your participating whole life insurance policy with an affordable and comfortable premium will start compounding in your favor immediately. And your convertible term insurance policy will increase your insurance coverage while giving you the guaranteed right to purchase more participating whole life insurance later as your income rises. So, when should you purchase your next policy? You should purchase your next policy when it's affordable and comfortable for you. Large participating whole life insurance policies are great tools to have working for you, but only if the premiums are comfortable and affordable to you. Something else to keep in mind are the IRS rules which regulate how much money you can put into a policy and how much you can take out before it becomes a modified endowment contract and you're taxed on the growth of the policy. Sometimes modified endowment contract policies will be proposed because of the cash value to premium ratio, and while there are some cases when a modified endowment contract makes sense, most of the time it's better to fund each participating whole life insurance policy gradually at a rate that is comfortable and affordable for you. Keep in mind, no two participating whole life insurance policies are the same, just as no two individuals are the same. Each policy is issued based on your health, your income, your net worth, and a host of other things which are entirely specific to you, which is why underwriting is so important. Underwriting makes sure that you get the best rating and the highest possible coverage with the dollar you are spending for your participating whole life insurance. And of course, we want that dollar to produce as much guaranteed cash value as possible, because cash value is the life benefits of participating whole life insurance.